Alright traders, I'm back again with another video, and this time I'm going to be talking about trading Kumo Breakouts, Kumo Bounces, and Kijun Bounces. Looking at my chart, you'll notice that I have all the indicators on here except the Tenkan-sen, so the Tenkan-sen is removed from your chart. This is going to be a very good trading style that you may like, that you may adapt to easily, and that you may try to just stick with and make it work for you, because you can get a lot of profit with breakouts and bounces. And you also have to be careful because a lot of times breakouts don't develop. So to make sure that we can decipher through those breakouts which trades are good, which ones may not be, we're keeping the Chiku span on here so that you can use that as your that'll be your filter right there. So here's the Chiku span, pink line, dashed pink line. And here's your Kijun-sen. This is the blue line here. Now the Kijun-sen is sometimes noted as a trend line, and I'm going to show you that in a better market that's trending. And as you know, support and resistance levels are the the Kumo, top, bottom, and also the Kijun-sen. So let's get into this. Right now you're looking at this chart. Your chart probably looks a little different because I have my settings changed. So I'm still, again, like I told you before, non-traditional settings of I have this set at 18, 52, and 104. Now what that's going to do is, instead of making this Chiku span 26 back, it's 52 periods back. So I'm looking at a longer period, which is going to make me have less trades also, but more reliable signals, stronger support and resistance levels. And I'll show you on the chart. We'll do it right now. Let's change this indicator. We'll put 1 with the normal setting so you can see what it looks like. And on a normal setting, basically I should be in a trade right now on a breakout. And let's show you. Okay, see, this cloud above is the longer time frame period. This is the double time frame period, so that's the 18, 52, 104. This is the default settings, the regular settings. So on the default regular settings, you would have been in a breakout right here. You would have been into a trade now and making profit. And you can see your Chiku span would have told you to go into the trade because it would have been above the price action. So you can keep your settings normal. You don't have to change any settings. I have my settings changed for various reasons. Just keep your settings the same as the normal Ichimoku default settings. But if you want to, you can change it to the non-traditional settings that I told you, the 18, 52, 104 settings. So let's put it back to the non-traditional settings, and then we'll start from there. This computer is like not wanting to do what I ask it to do. Okay, so we're back to normal. Well, back to the settings that I'm using. Okay, so with the settings that I'm using, I'm not in a trade yet. Okay, so I'd have to wait. I'm still waiting for price to come out of this cloud. Now another thing I did is, this dark blue line here is going to be the Kijun-sen on the daily time frame, so I know that support level there. And then this light blue line right here, that's going to be my Kumo cloud bottom, flat bottom on the daily time frame. If you look on the daily time frame, you can see this is the Kijun-sen right here. So I put a line where that is, and then here's the flat bottom Kumo. I know that's going to be a support level when if I come back down to that level, or if I break that level, then maybe I want to get into a short trade. So we'll go back to the 4-hour time frame. Now on the 4-hour time frame, if price did break this level based off of the rules, and the rules are using the Chiku span, if we broke this level now, even here, we wouldn't be able to get into the trade because Chico Span is telling us that it's not a good trade, the momentum is not strong, and we could come down here and range for a little while and then maybe break back to the upside. Okay, so I'm still waiting for price to break outside of this cloud. If price breaks outside of the cloud, I can go. Now the Chico Span will be probably inside of the cloud or around the cloud. Now you're going to have to know that if Chico Span hits the bottom of this cloud, it could push it back down. The phone rings every time that I'm making a video. Every time. It never fails. But anyway, um, price goes up and Chico Span comes up and Chico Span hits the bottom of this cloud, it could fall back down. But we're going to go based off of price and where Chico Span is related in terms of price. Now we like to see Chico Span get outside of that cloud and then we have free sailing. But we can still take the trade just because it's not outside of the cloud. The main thing is being above the price or below the price, depending on which trade you're taking, short or long. So for this long trade, if we're looking long, we want to get outside of this. This will be a breakout, and then Chico Span is telling us that we're good to go. Now, like I said, some technicians will tell you that they're going to wait for Chico Span to get outside of the cloud also, and then have nothing in its way. The main rule is make sure that Chico Span is above price, because if it's above price, then it's moving. That means we're in a range. I mean, a trend, because price is breaking higher highs or lower lows of 26 or 52 periods, depending on your settings. 26 is the default setting, so we're 26 periods ago we're higher than the price was. So that lets us know we are in a trend, right? I mean, yeah, a trend. So we're not really ranging. We're not in that same range that we were 26 periods ago. So this is your 52 period mark for me, but it will be 26 on the default. So if it was 26 periods ago and we're still within that range, Chico Span's in that price range, then we know that we're not really moving. And if we see a little breakout of the cloud but we're not above the price, then we're still in that range. We need to get outside of that range. Okay, so do you understand that? Hopefully you do. Let's go to another pair, 4-hour time frame. Now here's a good looking trade, one that I didn't get in. But anyway, you see price break outside of the cloud here. And the thing is, when you're trading these breakouts, here's the rule. Let's go back to the other chart. You need price to be below the Kijun sen. That's going to be your signal that the trade is developing, and then you need to break outside of the cloud. So as long as price is below the Kijun sen and then it goes below the cloud, we can get into a trade. Looking at your Chico Span to see if it's a good trade, filtering you out of a bad trade. That's your rule. You just go get in the trade. So you have your signal and then your trigger. Your trigger is going to be breaking outside of the cloud. The trigger is the breakout, the Kumo breakout. The signal is the Kijun sen. That's signaling a change of trend for the pair. So the pair was moving upwards, so you were trending upwards. Then finally the pair consolidated, slowed down, lost momentum, and then broke below the Kijun sen. When it broke below that Kijun sen, that alerted me that, well, maybe something short is coming up. We'll be looking for short opportunities once we get below the cloud. Well, it stayed below the Kijun sen, and then it broke below the cloud. When it broke below the cloud, that was my trigger to get into the trade. Now see, we're going to wait on this this pair and see what it does, if it even gets outside of the cloud. We're above the Kijun sen, so our signal is long trades. We want to wait till we get outside of that cloud. Now talking about this trade here, this is breaking out of the cloud, and then go back 52 periods for this, because that's what this settings are. 52 periods would take us right here. We were right below price. This would have been a good trade. Now still remember, you got to remember that you still have that possibility of being pushed back with the cloud here with Chico Span. But once Chico span broke out of there, see, and it did hit the bottom of the cloud and went back up. All right, so Chico span came down. It got through this part here, so it beat the first level, and then it observed that second level and didn't break it, and then finally it violated it right here. So if you got in here, you were good to go. Now then, another thing, you could get in on a bounce. So a lot of times you'll see these bounces, and it's going to be a Kijun bounce. Price came down, came down, came down, and then it went back up to this Kijun sin, which is in line with the Kumo cloud. And then you look at that Chiku span 52 periods ago. 52 periods ago it was below price, but it was still above that cloud. Okay, so still the trade was good and it worked out. So you bounced off of the top of here. Once you see that price bounce, you can get in on the next candle, or you can put your entry order right there at the bounce. But you're probably going to be a little bit away from the Kijun sen, because sometimes price doesn't come exactly to that level. And then you can put your stop loss a little above this cloud, because you see how tight that is. That's close. You won't have a big stop loss. Or else you can put it above the next stop loss level, which would be this fractal level right here. But then it's getting you bigger. That's why you want to stay as tight to support and resistance as you can when you get into a trade. So if you put your entry here, once price hits that level, then we're already expecting short trades. So you're all prepared to go, and you're just risking not much to make this much down here. Okay. So now you stayed in the trade, you're in the trade, you're in the trade, and then finally price comes up and closes above this Kijun sen. Now you're out of the trade for sure. Now you're waiting to see what's going to happen here. You can take this bounce right here, but what's going to happen if price doesn't go below this level, or even if it does, and it takes time, this Chiku span is going to be inside of this price here, and once it gets inside of price here, that means it could range. So this trade could bounce here and maybe range in this area, and then finally go the other way, because Chiku span is right in line with this price, and it looks like the longer this takes to move downwards, Chiku span is going to get caught up inside of price, which is going to mean we're going to be ranging more, because we're not breaking the level high or low of the last 52 periods here with Chiku span. So now we're looking at the pound CAD 4-hour time frame. Here we go again. You had price break outside of the Kijun sen, so we went below the Kijun sen. Then price bounced on the cloud, moved back up. We stayed below the Kijun sen, then it broke outside of here. Now when it broke out here, we knew you could tell you're way below. 52 periods ago, you're below. You use your Kijun sen as your stop loss, but sometime that Kijun sen is going to make it big. So you got in here, then you can go to the next candle and put your stop loss. You could go to the fractal level. It all depends what you want to do with your money management, how many lots you're going to have to take to keep your money management tight. So those are all factors. If it's a big stop loss, you're probably going to want to you have less lots. Maybe it all depends what your trading account size is and how much you can risk. So I'm not going to get deep into that. That's going to be something for another day. This is just talking about this trade. But yes, the stop loss is important. So the level is also important, because if you put a stop loss just anywhere, yeah, you have to give the market room to move, and there's levels where usually it's going to move to. So a sensible stop loss we have to make sure we're doing. But you got the breakout here, and you can see we're far away from the Kijun sen, so that's a big stop loss right there. All right, so you go ahead to the next candle. This is a big candle, and it still is pretty good, and it might have got stopped out anyway. And now price broke back, came back above this, so now we're looking for something long, but we have to wait for price to break upside the cloud. Well, it couldn't violate the cloud, so it observed it, came back, bounced So it looks like maybe this level is going to hold as a support level. So your Kijun, you know, is a support and resistance level, and it looks like it may hold as a support level here. And if it does, then it goes back up and breaks the cloud, and we get into the trade. Now you see this flat top, long flat top developing. This is going to be a strong support level, a resistance level rather, because price is below there. So we want to make sure we get above that cloud if we're going to be taking this long trade, but we have to see what happens here. Now price could break this level and come back down, and then we'll look at these levels here, this level here. Now if price closes below this level right now, we're going to be close to being inside of the price realm with this Chiku span, and that could mean ranging and then nothing and then a bad trade. So your Chiku span is telling you maybe not this trade if it does close below here, because what you're looking for here is you already got the bounce, you're already below the cloud. Now you're looking for a level where you could get back into the trade, and the level is on the other side of the Kijun, but the Kijun is telling us it's a change of trend, so we're going, it's a long, a long trade. That's what the Kijun's telling us, because price is on the upside of it. If price is on the downside of it, then it's telling you that we want to be looking for short trades. So if price closed below that, then I'm thinking short trade, because we're already below the cloud, but I'm looking at Chiku span, not a good trade there. All right, so here's a couple good things on this chart. Here you had the breakout, so it was this candle here. We got above the cloud, then we got above above Kijun. So let's see where the Chiku span was 52 periods back on this chart. It's not, actually it's not above this price. We need to get above this price. So this would have been a bad trade, and you could see what happened. It didn't work. The trade didn't work. I mean, you probably could have got something, a little bit of something here, but barely anything. So that trade didn't work. We're not looking for little things like that. So then price came back, bounced off of the cloud. The cloud has this strong level of support right here for this. So then price came up and it broke here. And then you get into the trade on this candle. And look where this candle and the Chiku span are. We're above everything. Chiku span's telling you this is a good trade. This is a good trade to get into. You get into the trade and you ride it. Now another thing that you could see if you didn't get into the trade, here's another Kijun bounce right here. So price went up and then it retraced as usual. Price is going to retrace, and then where did it retrace? It bounced on that Kijun right here. Now this is probably right here going to be a 50% retracement level, and this moved it down to 61.8 probably right here. So if you could see, price never closed below the 50% retracement level, but the wicks came all the way down to here. So that's how you could say, like, if you got into a 50% retracement level trade with a Fibonacci retracement, you could still get stopped out, because we can put our Kijuns in here, and that would be the support level where we want to have our stop loss below that level, because we're using this Kijun as support and resistance level. So that's where you would put a stop loss on a 50% retracement level. All right, you understand that? But anyway, here's the bounce, and if we got into the trade, let's see where the Chiku span was, and definitely it looks like it's above 52 periods ago, most definitely. 44, 52, yeah, it's way above. So this would have been a good trade off of the bounce, and now you're putting your stop loss a little below that level. So if I got in here, I see a logical level right here where this would have made a fractal right here. This is a fractal level, and I could put my stop loss below this little level right here, and that won't give me a big stop loss. This is a logical spot based off of support and resistance levels and where the market may go. All right, and then the trade ran and ran for a little bit, and here comes another bounce, another Kijun bounce. It didn't hit that target. It didn't hit it exactly, but it's close. That's why I say you put your entry order a little bit above that, because you see price retracing. Now you want to get your entry order a little bit above that. Maybe you put 5 pips above that, because we don't want to get too deep off of this level. We always want to be tight. We always want to have a tight level to the support and resistance area, because price is going to either violate that level or it's going to observe it. If it observes it and it doesn't violate it, then we're safe. But if it violates it, then we're out of, the trade doesn't work for us, and we don't want to have a big stop loss. So we're counting on support and resistance being observed and holding. And you could see 52 periods ago this was still above price. And then here's another bounce. See that bounce? And this was really telling you something, because look at the candle. It came all the way down here and got pushed all the way back up off of that bounce by the bulls. So you could even wait it for this candle. Once this candle closed, if you didn't take that bounce, you are going to take the bounce on the open of the next candle, because this candle is telling you a lot of things. And then you just put your stop loss a little bit below the Kijun Sen. All right. And yes, we're way above price 52 periods ago. Let's go to euro dollar. Right now there's nothing to trade with the euro dollar. Okay, so you don't want to be going long. You're below the Kijun Sen and you're below the Kumo cloud. So you have to wait for areas. Now the next area would be when if we break this level low, because we're below the cloud. We're below the cloud and we're below the Kijun Sen, so we want to look for something short. So we want to break this level, and then we want to see where Chiku span is at that time. Now here's a level of support and resistance. Going to be this shadow right here. That shadow right there. That's going to be a level. Maybe price comes up to that level, and then we get into another trade short. Then if price breaks that level, it'll also be breaking the Kijun Sen. That'll be signaling a change of trend. So maybe change the direction of the trade will change, and we'll be looking for something long once it gets up past the Kumo. Here's another pair. You could see this pair is all over the place right here, but you didn't get into any trades right here. Here's a bounce you would have lost right here, but see, you got to filter with your Chiku span and see what Chiku span is telling you. So let's filter that and see what it tells us. There's a couple bounces. Let's look at them. Here's a bounce right here. So price broke the level, then it bounced, and we want to get in on the bounce. Do we take this trade? Let's go back 52 periods, see where Chiku span is. It's below price, and we don't get into this trade. But this trade would have worked out for you, but still we didn't get into the trade because of the Chiku span. Now here's another one, bounced right here. Did we get into the trade? This one we get into because we're above price. So we got into the trade, and then you could see where Chiku span got inside of this price right here, and you see what happened with the price forward and ahead of Chiku span. We got into a kind of like a consolidated phase, and then finally once Chiku span broke outside of price took off too. Alright, so really this is off of price, but Chiku span is going off of past history and it's holding true. Okay, now here's another bounce, and 52 periods ago we're above everything. So that would have been a nice trade, the bounce here. Here this told us we're looking for a change of trend, so maybe we're going to look for stuff to start go short again once price goes below the cloud. That never happened. We went back above the Kijun Sen here, and now we're looking again. Once you break, if you go below here and then go above the Kijun Sen, you can go on that Kijun Sen break right there. So you could get into this trade, but price has to, Chiku span has to tell you we're good to go. And 52 periods ago, yeah, we were good to go to get on this trade once price closed above the Kijun Sen, because you closed above the cloud, and then instead of being a bounce, it's breaking the Kijun Sen. I mean, back from the bottom again. So we broke here, but we can't get into a trade on a break here because we're not below the cloud. But we can get into it on a break here because we're above the cloud. So the break here is going long. We're already above the cloud, and now we're going back above the Kijun Sen. Every time you break, you can get back into the trade. You could get into the trade. This is another break. This trade, this one would have told you don't get into it because it looks like we're below the price with the Chiku span. This is the bounce I showed you previously, and that would have been a good trade. Now here's a bounce right here. You need to see what's going to happen with this candle. We could put the entry order right here. This is a level of support right here. You could see where this is making support. So I could put a line there, and you could see that level. And also you could see that level with Chiku span. You see where the point is. That's how you get your support and resistance levels. So that's the level there. We're bouncing, we're ranging, and in a minute price is gonna Chiku span is gonna be inside this price realm. That's gonna be ranging. It probably wouldn't be a good trade here. When you're ranging inside this previous price realm, yeah, price can move up to this level, but maybe if it ranges for a while, we may get a change of trend. See what happens with the break of the Kijun sen, and then you can see what I'm telling you about your support and resistance levels. You just put this at the top of that peak, and you could see it. And then here's the bottom, so that we're in a range right now, right there. So we put another line, and we can see the whole range. You see the whole range. Here's where it started. Range, 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 and then we're here. So that's the pound yen 4-hour time frame. US dollar CAD. And this was a trade I was in, got out last week over here. Made like 150 on this, 150 pips. Let's take this back a little bit. Alright, so price here, we're above the cloud, or above the Kijun sen. And now price breaks the Kijun sen, we're looking to go short once price breaks the cloud. Price breaks the cloud right here. 52 periods ago, we're below price, and we're pretty much below the cloud. So this would have told us to take this Kumo break. And the Kumo break happened, and it looked like it was a good trade. Now, one rule that they teach when you do a Kumo break and to get out of the trade is when price goes back on, closes on the other side of the Kijun sen. And I don't do that, but that's one of the rules. You can get out when price closes on the other side of the Kijun sen. So you would have got out right here when price closed on the other side of that Kijun sen. So your rule here is you get in on the break of the Kumo, and you ride this trade until price closes on the other side of the Kijun sen. So that would have got you out right here. And so let's see how far that would have taken you. So you get in here, and you would have rode it to roughly about here. That'd have been about 84 pips. And then there was more profit down here that you would have lost out on because you waited. When price went down here, you waited for it to cross the Kijun sen. Okay, so that's the rule. Now whatever you do, that's on you. If you decide to not do your exit rule like that, I told you how to do exit rules in a previous video that I do a little different. I don't follow that Kijun sen. Okay, so here's where price closed and went above the Kijun sen, and here it is above the Kijun sen. It bounced right here. You can't get into a Kijun bounce. Why? Because we're below the cloud, and the bounce would have wanted us to go long, but it looked like it would have been a good trade. But we want to be safe. We want to make high probability trades by doing the proper things that we're supposed to do, and trading below the cloud, it's not one of the things that we're supposed to do. So we wait for it to close above the cloud. Here's the breakout. Chiku span is above everything except the cloud, and price retraces, and then it goes again. And this is still a good looking trade. Now it's not good to get in this trade anywhere right here yet. The only place I would get into this trade is if it bounced off of the Kijun sen, or if it broke this level here. So if price broke this level, then I can get into that trade. Now also you want to remember how far away are you from the Kijun. If you're too far from the Kijun, you're out of equilibrium. So the market wants to get back into equilibrium. It's going to move back to the Kijun to get in equilibrium again, and then it's going to take off again. All right. So US dollar, Swiss franc, same thing. Very easy to do, very simple to see. You break out here. Where's price 52 periods ago? Let's see. It's just above price. All right, so we could get into this trade and you could see it worked out. Now here was a pullback. It didn't bounce off the Kijun. You wouldn't have been able to get in here. You would have missed that. But you can still always do the same thing that we always do. Get in on the break of this fractal level. So you always have levels where you could get in. Once the market pulls back, look for the fractal breakout. Look for the Kijun bounce. That'll get you in early, the Kijun bounce, and then look for the fractal breakout. That'll get you in later, but higher probability. Now the bounce of the Kijun is going to keep you tight with a tight stop loss. So that's also a high probability trade. And you're trading off of support and resistance area. Here you're trading off of the break of that support and resistance area. Holding the Kijun, you're trading off of observing that support and resistance area, so it's not being violated. So we're expecting the support or the resistance to be observed and be held. And basically price is up here. We can't get into a trade until price closes above this level here. I don't know what I put here, what I put this in here for, but here's where I would get into the trade again. And you can see where the level is. Kijun made a, Chikou span made a point here. That's where you put that support and resistance level, and you can see it lines right up. Now if price closes above this level, you see price went all the way up here, from here, went all the way up here, and still didn't close above that level yet. It pulled back from that level there, made a long wick here. This level is strong, so we want to see this level be violated, and then we get into the trade. But also be aware how far away you are from the Kijun. That's going to be important for you. All right, so that's that with the US dollar, Swiss franc. And then here's a pair. You could see how nice it rides with the Kijun. Here's a breakout. Let's see. Let's observe this Kumo breakout. Where are we? All right, here's the Kumo breakout here. Let's move this forward. See where the Chikou span is. And it looks like Chikou span is below price 52 periods ago on this chart. And depending on where we put our stop loss, we probably would have got stopped out because we're keeping them tight. And then you can see you got a bounce here. So you got a Kumo bounce. So you got your Kumo bounce. You got a break here, but then a bounce here. So on the bounce, you could get back in the trade. You look where Chikou span is. It's below price. And this trade would have worked out for you. And if you get out on the rule that when it closes above the Kijun, you're out here, not a real big profit, but you didn't lose very much because it didn't go that much farther down. But that is some good profit that you lose. That's almost half of that. And so there's a couple things you could do as far as your profit if you don't want to wait for a price to do that. And here it bounced, came down, pulled back, stayed in this little range, broke this level. This level right here is a support level right here. So let's bring this down. So this is a resistance level once price went down here. Now we see price going here, bouncing on that level, then it closed above that level. Maybe we get out of that trade now. We moved our, instead of moving your, you don't have a limit order where you're gonna, how much you're gonna take for profit. What you got is your stop loss. So you bring your stop loss down, 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 and you bring it to this level because price went down here, so you bring your stop loss here. And now when price went down here, you wait, and then it came and it stopped you out for your profit. So that's just one way. I showed that on other video that I made. And then finally you can see another Kumo bounce. We're above this Kijun. We don't want to get into the trades above the Kijun. We want everything to be lined up properly. So being above the Kijun Sen, it wouldn't have worked anyway, because you could see that Chiku span 52 periods ago was above price. So that all those rules would have been broken. You wouldn't have been observing the rule. So now we break and we're still above price. So we need Chiku span to get below this price right here. And what it does, it goes back up and then it breaks again. And now it's below price 52 periods ago. So now you could get into the trade on this break right here. We're below the Kumo and we're below the Kijun Sen. And now you can see where that trade went. And that trade worked out. And you can see we call this the trend line because it just follows that. And now the next time it comes up to it or goes above it, then we say that's going to be change of trend. Alright traders, that's pretty much it. That's trading that Kumo break, Kumo bounce, your Kijun break and bounce. And you already know how to trade your fractal levels. We've been talking about that. We talk about this Kijun break, the Kumo break all the time because that's one of my mainly big trades that I like to trade, and the bounce. And we'll go over this again. I'll make more videos. We'll do some live trades when I have some opportunities. But if you have any questions, just let me know. All your settings can stay the same as the default settings, or you can move them double up to what I have. I'm defaulted doubled up. I get less trades but more dependable trades, stronger support and resistance. You keep your default settings, you're going to get a couple more trades, maybe some false trades. Okay, so it's just like with anything. If you make the time frame longer, it's going to be stronger. Alright traders, that's it for now. Until next time, hope you enjoyed this and hope you learned something. And we'll be back again. So God bless. So long.